Hello, welcome to Within the Frame, where we delve deeper into the top stories taking place not only in South Korea but across the globe. I'm Kim Bo-kyoung. Today we focus on the economy. Last year was a rough one as inflation hit a 24-year high in Korea, with consumer prices up 5.1%. Though the government projected inflation to be 3.5% in 2023, the price rises seem to keep on coming, with utility and public transport fees also going up this year. To contain inflation, the Bank of Korea kept hinting that there might be yet another rate hike as the central bank aims to stabilize consumer prices, putting it as its top priority, which could lead to a slump in real estate sales and put more burden on household debt. External conditions do not seem promising either. The ongoing war between Ukraine and Russia, as well as surging COVID-19 cases in China, are expected to hurt the Korean economy. To tackle the strong economic headwinds and global uncertainty, what should South Korea do? We bring you in-depth analysis of economic issues, and for that, we have invited Professor Yang Jun-seok from the Catholic University of Korea to the studio. Hello, Professor Yang.
Hello.
Hello. And we also have Shin Myung-gyu, Associate Professor at Yonsei University, in the studio as well. It is a pleasure to see you.
Good evening.
All right. Now, starting with Professor Shim, South Korea's consumer prices, like I said before, jumped 5.1% last year, and it was the fastest on-year rise since 1998. And the government projected the consumer price inflation to be at 3.5% for this year. I mean, it seems like it's on a downward trend, but how do you see this?
I think this is a downward trend. So we can expect that inflation will not be that high compared to the last year, but we need some cautionary notes because there are still some pressures that can put the inflation rate to be higher over time. So in terms of the inflation rate to hit the peak, if we think about the inflation rate in July, it was higher than 6%, but in November it was about 5%. So there is a trend so that we can think of that inflation rate is somewhat contained, but there can be still issues like the continuation of the Russia-Ukraine war, as well as the US-China trade war, so that we need to be careful when making the prediction about the inflation rate.
Right, so it is not going to be as high as last year, but we still need to keep an eye on it. Now, Professor Shim, utility prices such as electricity, gas bills, as well as transportation fees, they're also going to be increased this year. Now, how will these affect Korea's fight against inflation?
Yes, actually, this is another factor that can push the inflation rate to become higher even in this year, because until last year, the government has prevented the public prices not to hike because of the pressure on the inflation. But this year, it is expected that the electricity rate is to be increased to about 20%, and also the subway fee is also expected to become higher so that it can be another pressure on the CPI, because those items are another important factors in the CPI, so that it will be another factor that can push the inflation rate to be higher, so that we need to worry about such a situation. But given that the Bank of Korea has raised the interest rate enough, I don't know if enough, but it has increased, and there will be a lagged effect of the monetary policy on the inflation rate, so that it may offset the effect from the higher public prices.
Right. Now that Professor Shin brought up Bank of Korea's decision, now Professor Yang, to contain inflation, Bank of Korea Governor Lee Chang-yong kept stressing that price stability is going to be the top priority for this year as well. And so eyes are on the upcoming monetary policy decision slated for January 13th, which is, as far as I know, next Friday. Now, what decision is the central bank going to make? And if there is going to be another rate hike, how big will this be?
Okay, well, I'm thinking that it will probably be a 25 basis point increase, a 0.25 percentage point. And the reason is that Korean inflation is still fairly high. Headline inflation over 12 months was 5.0% in December. Monthly just for the month of December was 0.2. That doesn't sound too bad, but if you look at the core inflation without agricultural goods and oil, 12-month basis, it was 4.8%, and on a monthly basis, it was 0.4. So that's still very, very high. The core inflation without food and energy, it's somewhat better, 4.1% over 12 months, but 0.3% for the month of December. So it's not as bad as the other core inflation, but it is still higher than what we should have if we want to maintain the goal of 2.0% inflation for the year. But in addition, you have to, I think the difference between the U.S. and Korean interest rate is also an important matter that the Bank of Korea is considering. Right now, the U.S. has a higher interest rate than Korea. U.S. Interest rate is 4.5%. Korea is 3.25%. And whenever you have that kind of interest rate reversal, there's always concern about the exchange rates and capital outflow from Korea to other countries. So we want to keep that gap somewhat manageable. Right now, the U.S. Fed is signaling, and the market is expecting the Fed to raise the rate by 25 basis points in late January, early February. So I think we'll match that. Right now, the gap between the U.S. and Korean rate is 1.25%. I don't think the Korean government wants to have it, or the Bank of Korea wants to have it larger than that at the moment. If the Korea recession gets worse, then we might consider raising that gap. But right now, I think they want to maintain that gap. So since the U.S. is expected to raise the rates by 25 basis points, I think Korea is going to match it.
Right, like you said, it is important to keep the gap manageable, right? But I believe the Bank of Korea would be in serious dilemma right now because it cannot keep going on to do the rate hike, right? At some point, it needs to do the rate cut, but when would be the proper timing for that?
I think the proper time is when U.S. starts to stops raising its rates, and perhaps when the U.S. starts lowering the rates, Korea can lower the rates as well. The big consideration here is whether the Korean economy can handle that. And right now, even though we have some problems in the real estate market, and even though there's maybe some signs that the economy will face a slowdown and even a recession, right now I think inflation is the more serious problem, or at least the Bank of Korea considers it. If Korea gets into a recession faster than everybody expects, then there may be an off chance that Korea will lower interest rates before the United States. But if things are relatively stable, if the capital outflow, there's capital outflow right now, but it's slow and it's manageable. The exchange rate is now stabilized below 1,300 won per dollar. So I think the Bank of Korea will put its emphasis on inflation and will continue to raise the rates as long as the U.S. raises their rates. And if the U.S. stops raising their rates, then Korea will maintain that rate until the U.S. Starts to lower their rates.
So until the proper time comes for the central bank to consider it right to do the rate cut, I guess the government would be responsible for debt management, both for households and corporate. Now, how do you think about the debt management should be?
Okay, well, right now, mostly because of the housing market, the government seems to be loosening up regulations, not only on the sales of housing units itself, but also things like financial regulations like the loan-to-value LTV or DTI, debt-to-income ratios. But I'm happy to see that they are keeping the debt service ratio, DSR. And that's because DSR makes sure that, first of all, from the borrower's point of view, they do not borrow too much compared to their income and their wealth. And then from the financial side point of view, it makes sure that there's not that much bad debt by lending to bad borrowers. Now, every time when Korea seems to be facing a slowdown or recession, one of the favorite policies that the government brings out is the they try to give preferential loans to bad risk companies which are marginal or households on the lower income level. I think that's dangerous. Whenever we talk about the dangers from the household debt, we talk about how much debt is being held by marginal households or marginal companies. And whenever we have a slowdown, we encourage these marginal households and companies to borrow even more. So I think there needs to be a fundamental rethink about that type of policy. If we need to have these people borrow or have some more money to get by the downturn, then let the government just give them the money. Otherwise, you're weakening the financial sector, and I don't think that's a good policy. The government is using the depositors' money from the banks to carry out public policy, and also, I don't think that's a good idea.
Well, thankfully, since Professor Yang came up with, falling housing prices, I think we need to stay within the frame. Now, Professor Shim, falling housing prices are actually a big threat to people who are already suffering from rate hikes, right? Now, for soft landing, the Land Ministry said it is going to lift the real estate regulations in almost all areas in Seoul. Now, do you believe such measures will be able to slow down the housing market slump?
Yes, in my work, but with some limited effects. So I think there are two factors that limit the effect of such deregulation. The one is that the DSR regulation has not changed that significantly, as the minister of the ministry told in the previous talk. And also, the interest rate has increased a lot by the Bank of Korea, and particularly for the loan for mortgage. It was 3% in July 2021, but it has increased to about 6% recently. So it has increased by twice. So it limits the behavior of the consumer or household to borrow to get the house. So that I expect the effect will be not that effective, although it has some positive effects because the previous regulations really prohibits the consumers to trade in the housing market. In summary, I expect the housing price will not increase that much, but maybe there will be some positive effect.
Right. Now, Professor Yang, when the economy is facing such kind of strong headwinds, hardest hit are actually, those with low income and vulnerable groups. What kinds of policies should government come up with to, manage the risks they are facing? Okay,
well, whatever assistance that we give the marginal households, I think it should be given on a giving basis rather than having it on a loan basis. As I said in the last question, one of the favorite Korean policies is to have them access to preferential loans. But the problem is these households have been in trouble for about 3 years already, and the household debt is already very, very high. It's the highest among most countries that are surveyed. And the most worrying component is household debt held by these marginal households. So I'm not sure if having them get access to even more loans is a good idea, not only for the financial sector, but for these households themselves. So if you're going to give them any kind of assistance, it should be on giving them cash or giving them material assistance that does not necessarily need to be paid back. And then I think the European Union had a fairly good experience with job subsidies. What I mean by that is give companies assistance, especially marginal companies, but on the condition that they will maintain the jobs that they currently having. So they will not add to any more unemployment. Give the companies the money to maintain the employment as it currently is, and I think that will help both the companies and the marginal households.
Right. Now, Professor Shim, we cannot miss, economic growth outlook. Sluggish domestic front and challenges from overseas all combined. The Finance Ministry forecast recently was that South Korea's economy will grow 1.6% this year. Now, what is your takeaway for this number and how bad is it?
Yeah, actually, this is really low, and I'm somewhat surprised because this number is even lower than the other institutions like OECD, KDI, or the Bank of Korea. And this implies that the economic environment has become worse than the other institutions made their predictions, so that there was at the end of the last year, something bad really happened. So it poses the negative forecast on the Korean economy as well in this year. And if you look at the data in the previous years, actually this was the worst number since 2009 after the financial crisis, except 2020 when the COVID-19 really hits this economy. So I think this is kind of the bad situation, but it is inevitable because the Bank of Korea has raised the interest rate to cool down the economy so much. And actually that's inevitable in the other sense also, that the inflation rate was really high, so the Bank of Korea has to do that. So I expect the situation on the inflation rate does not seem to change that dramatically this year, so that the economic outlook that the ministry has just suggested maybe become even lower than expected in the last year.
Quite unfortunate forecast. Well, Professor Shim, we need to move forward to the trade sector. Now, Korea posted its biggest trade deficit ever last year. How come this happened, and what are your thoughts on this year's trade sector?
Yeah, for the import, actually the most important factor behind the biggest trade deficit was the hike in the energy price, as you might know. For instance, WTI, the oil price, has increased until the mid-2022, and also there was a disruption of the supply of the natural gas because of the war between Russia and Ukraine. And those factors really affect the prices so that it hurts the total imports of Korea, because oil, gas, and the related products take about a quarter of the total imports. So even the export was really good last year, it could not change the direction of the trade deficit. And also, given that the war may be prolonged also in this year, and given that the trade war between China and US has not ended, and also there are some issues related to environment and the kind of the IRA Act in the US, those will also raise the possibility of the trade deficit as well in this year.
Okay, so the reason for the trade deficit was because of the import, but we also need to take a look at the chip export, which kind of slumped down, right, last year. Professor Yang, to revamp the chip industry, one of the main export items for South Korea, the government said it will seek to expand the tax incentives this year for chip industries. Now, do you believe this could help revitalize trade sector and, of course, the chip industries?
Well, if the incentives are around for a reasonable period of time, then I think it'll help in the long run. I'm not sure if it'll help in the next couple of years. And the reason is that the semiconductor industry is in a slump, not only in Korea, but globally, so there's very little demand. What tax incentive Korea gives to Korean semiconductor producers will not create demand overseas. So I think what would happen is, if we are lucky, then the additional investment from the tax incentives, they may shift demand from some other companies, some other countries to Korea, but it will not create demand, so I don't think it'll be of a lot of help. But once the demand for semiconductor recovers, and what's usually shown nowadays is that when demand increases, investment increases as well. So investment follows demand rather than the other way around. So if the global market recovers, then I think this tax incentive will be a very useful tool. I think we will have more investment then, but For now, because of the global market is in a slump, I don't think we'll see that much of an increase in investment. We may see some increase in investment because the semiconductor companies may want to thank the government for having this incentive. But still, fundamentally, I don't think the demand is there. And until the demand recovers, I don't think we'll see a lot of gains from this tax incentive. That again, doesn't mean it's necessarily a bad idea. Once the global demand recovers, I think this incentive will help. But until the demand recovers, I don't think it'll help that much.
Then, Professor Yang, not just the chips, the National Assembly actually last year, it passed a bill to lower the corporate tax rate, right? Is that going to help?
Well, I think again, it'll help in the long run, but not necessarily in the short run, because the investment nowadays seems to follow demand rather than the other way around. But having said that, I do like the current version better than the original version of the corporate tax cut. In the original corporate tax cut policy, you eliminated the top tier of 25% and let them join the lower tier. So for the companies which are making the most profits, their corporate tax rate went down from 25 to 22%, and there would have been some reshuffling of smaller companies so that they will go into a lower tax bracket. But according to calculations made by some analysts, that original proposal would have only affected about 6% of Korean firms. So it didn't affect a lot of firms, and the literature here is controversial, but it seems that if you want an investment increase, it would be better to give a tax cut to all the firms rather than just 6% of the firms. So I like the current scheme where you reduce the corporate tax rate by 1% for everybody, but again, I don't think we're going to see any effect from that until demand recovers. So it will probably not be that much of a help this year. But once demand recovers, I think it will lead to further investment. And also, because about 25% of Korean firms are classified as zombie firms, they do not make enough profit to pay their interest, let alone taxes. I don't think you're going to see a whole lot of help, again, until the demand recovers.
Now, overall economic outlook for today was quite grim, unfortunately. Now, this is all the time we have for today's edition. So thank you, Professor Yang, for your insights. And Professor Shim, again, thank you.
Thank you.
Now, that's all for Within the Frame tonight. Have a great rest of the evening, and we'll be back tomorrow with more in-depth stories on the issues happening in South Korea and, of course, around the globe. Thank you for watching, and goodbye.